Kitco News special coverage of the Denver Gold Forum is brought to you by New Pacific Metals.
E.B. Tucker, Director of Metalla Royalty and author of Why Gold, Why Now? Welcome to the Denver Gold Forum.
Thanks for having me.
Pleasure to see you in person.
See you again, yeah.
Finally, we get to meet in person.
I know.
You and I have been speaking about your book ever since it came out last summer. You've sold 35,000 copies. Congratulations.
Thank you.
Okay, I've got to visit the title again. Why Gold, Why Now? You wrote this last summer, so presumably people should have bought in last summer. Of course, it went up for a while and it didn't do so well this year.
Yep.
Should you still go into gold now? Is this question still applicable today?
Well, as you know from reading the book, the subtitle is The War Against Your Wealth and How to Win It. And wealth has been under attack, since we came out in the book. I mean, 18 months or so, there's never been a time as a Western person in a free market where your wealth has been more in danger. And the people that read the book realize at the end, I tell what I've done with my money, which has worked out quite well. So everybody looks at the price of gold. What's the price of gold gonna do? And all this, is it a tough year, as you mentioned, hit a high of 2083 last August. Now it's about 1800. And we do think the gold price will go a bit higher, but that's not really how you create wealth. You can have it as wealth insurance. We explain that in the book, but the secret sauce in there is the royalties, and that's what I've done with my time and my money, and it's worked out quite well.
Let's talk about royalties and financing in just a bit, but okay, let's back up for a second here. Let's talk about portfolio allocation, because after all, that's what this book is really all about, protecting your wealth, how to allocate your assets. You even have a chapter in there called How Much Gold is Enough Gold, and you said minimum 3%.
Well, I don't say really a minimum, but what happens is that people always say, how much gold do I need to own? Is it 20%, is it 10%? It's a lot less than you think. Gold is not really an asset that you buy to go up in value tremendously to make money. Everybody thinks, I'm gonna buy these gold coins, they're gonna go crazy in value, the government's gonna try to seize them, I'm gonna make all. It's not really like that, it's insurance. Gold does well when other things get really hurt. And so we work with a number of 3%. We kind of play with this number and we say, look, if you had 10 million bucks and you had 300 grand worth of gold, that would probably be a starting point for saying it's enough. And I think a lot of people are shocked by that. They think, wait a minute, not so much more? No, your investments, your royalty company investments, mining businesses, all these things, these are things that you would see appreciation and sell, whereas the gold you could just hold on to.
For someone who is not yet invested in precious metals, he might ask you, E.B., what's the difference between gold and a high interest savings account?
Well, there's a huge difference. Everybody used to say gold doesn't pay a dividend, but the high interest savings account doesn't pay a dividend either. In fact, so you arguably are going backwards. In the book, we talk about negative interest rates, which are here now. We can talk about that more. Yeah. If you look at the real rate of interest, it's negative. That means the interest rate you're being paid minus inflation. And everybody out there, the real people in this world, know inflation is really high right now. All you got to do is go to the grocery store. Things are sold out. There's inventory shortages. I buy prime beef to cook for myself and my kids. It's over $30 a pound US right now for prime tenderloin beef. It was $20 a year ago. It's up across the board. Now, granted, that's the nicest beef you can get, but everything is up. Remember the paper towel shortages that we had? That's right. All these different things. I have stock in Campbell's Soup. They run this report on what does it cost for a basic can of tomato soup over the decades. And the price of all these things is going up, 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 up. So
would it come down? That's the question.
Well, maybe, but of course, always it's possible. But what's going to make it come down? You have labor shortages.
Stop buying the beef, E.B. Make the price come down.
Become a vegan. Become a vegan. The price comes down. But I hate to tell you, but the grain, grain is the same way. All your grains, your vegetables, supply chains are constrained. The port is backed up in Los Angeles consistently for 15, 18 months. You're having to pay people a minimum wage that's much higher than people thought in the past. They're still complaining about the wage. I know where I live, there's shortages everywhere. You go to a restaurant, the service is slow, the tables are all packed. I think this is something that people are really underestimating. And so here's the point. The point is not conspiratorial. The point is your high interest savings account pays you 0.5% interest per year. If you take out an inflation rate of 2 or 3 or 4, you pick your own number. You're going backwards. So with the ounce of gold, you don't get the interest payment, which by the way is taxable and taxes are going up, but you do get protection against that inflation.
I think some people who argue for the transitory narrative, transitory inflation narrative, which is what the Fed has been saying, will look at data like the velocity of money, for example,
Sure.
the M2 velocity
Sure.
of money, still at all-time lows,
Yeah.
still hasn't gone back up yet, despite a recovery in the GDP. And they're saying, well, look, velocity is low.
Yeah.
No one's spending money like they used to, so this is going to be transitory. What do you say?
Well,
What do you think?
I say, maybe I'll have my leg amputated temporarily, so it'll just be, a temporary thing. It'll pass. I'll grow another one. So this is not something that fades through. I mean, it's not fading through in supply chains. Every single company that you listen to the earnings call, regular companies, they're telling you having problems getting materials. There's not enough rubber. There's not enough copper. There's not enough employees. There's not enough trucks. They can't get it on any trains. I mean, I was looking the other day at some of the biggest investments for Gates and his wife and all these people are railroads. And railroads are a tremendous corridor for getting things here and there. And a lot of these billionaires are investing in railroads because you have this ability to have so much demand that business is absolutely fantastic. The railroads are buying each other. You just think about it. This all matters because the government tells you it's transitory. You believe it. I mean, it's like when if they really ever got anything right? I mean, let's be honest. Like, this is very rare that they've gotten something right. Use your own brain. You go to the store. You're in the store. Now, don't send the government to the store. You go to the store. Yeah.
So we're at 5.4% headline inflation. That was the latest reading, actually 2 months in a row. Do you think, when you say it's not transitory, what do you mean by that? Do you think it'll go higher and then plateau, or do you think it'll come down a little bit and then plateau around 4%?
Well, all right. So just remember, the 5.4%, not including all these things that no one buys, like gas and housing and all these school and healthcare, and take everything out that went up and it's 5%. But here's the thing I want you to think about. They're going to keep changing the way they measure this as time goes on, because there's a bit of a disguise. I mean, even at 5%, the 10-year is about 1.4 roughly. I mean, it's way down. Now, just one thing I want to really be sure we don't miss. Okay, do you know the Fed is buying somewhere around 40% of new Treasury issuance right now? And then they're also buying $40 billion a month of mortgage-backed securities, which definitely keeps rates low. And think about this, they own about 25% of the total Treasury market. They own about 20% of the TIPS market. So everybody looks to the TIPS, which are Treasury, securities that are inflation protected. Yes. And they say, oh, well, this is the rate. Yeah, but you have a whale that's buying most of the issuance that comes out. So how can they ever go up? They can never go up. And this is 14 years into an economic emergency. Remember? It was 13, 14 years ago that we said we just need a little bit of help. It was just a tiny, tiny bit of help. And imagine 13 years later, you're still taking on a lot of help. And now the debate is, well, when will they stop? They'll never stop. It's never going to stop.
Let's talk about that. Let's talk about it. You have a chapter in here focusing just on negative interest rates, which we have now.
Definitely.
Economists argue that could stop because the Federal Reserve has announced tapering down the line. In fact, at Jackson Hole not too long ago, Jerome Powell said that we will most likely taper before the end of the year. And then, of course, he has a new set of criteria for actually lifting rates further down the line.
Upon further review, we will taper maybe a little later, but we still intend to do it. I promise I'll clean my act up.
Asset purchases before the end of the year, will they reduce their mortgage-backed security purchases?
Okay, so think about this. If you had a stock, a lot of people here have had a mining stock, and you had a big shareholder that never sells and buys 40% of all the stock that trades. How could the stock not possibly go up? It would be, and everybody could try to short it and it would still go up because you have a whale that's buying into this thing. And so these guys are never going to stop, because if they stopped, the consequences would be catastrophic. I mean, the mortgage rate, for example, is supporting this huge housing boom. So if the mortgage rate went up by 1% or something, all the house refinancing would stop, because everybody would say, well, wait a minute, I can't afford this anymore. So it's never going to go up.
Well, what's the market expectation right now? Do you think the markets are already factoring in or pricing in a tapering? Because if they are, then it probably wouldn't have a huge tantrum. Right?
I don't even like when people call it a market. Like everybody says the Treasury market. It's not a market. I mean, a market is where you have free thinking buying and selling going on all the time, which sets the price. I mean, I have a chapter in the book that talks about a senior bank executive that asks the Fed why they don't fix the price of oranges. And they say, you fix the price of money, interest rates, what's the difference? And the Fed's like, well, this is America, it's a free market. It's not a free market. You don't have rates trading freely between funds. And so to answer your question, a lot of guys that I'm close with that run, guys and girls that run huge funds, when I meet with them, I find that they're delusional. because they're looking at this interest rate market and they're talking about it as if it's a real market. And it's not. It's a market that's heavily controlled. I'm not going to say fixed, but it's heavily influenced by one purchaser with limitless amounts of money.
Right.
So people need to see that. When does it stop? I don't know. But in the book, I say that I think that the rates can go a lot lower than people think, and you need to be ready for that.
Okay. Now let's talk about the other metals now, EV metals. Another piece of news I found interesting was Jeff Bezos and Bill Gates. We talked about Billionaires earlier. They're now investing in a new startup mineral exploration company, specifically for copper, nickel, cobalt.
Yeah.
So they're investing in the EV play.
Yeah. Well, they're late to the party. We did this about a year and a half, 2 years ago with Nova Royalty. It's NOVR in Canada, NOVRF in the U.S. Now, what people need to understand is, let's just talk about these royalties for a minute. Everybody's worried about what's going to happen next week, next month, all this. It's a speculative type of market that we're in. But the thing about royalties is you have decades of exposure to higher metal prices with no responsibility for operating costs. Okay, so think about that for a minute. That means if the gold price goes from 1,800 to 2,000, you got 30, 40 years of output coming to you with you don't have to pay any money. That's huge. And so what that means is it just goes like this over time. You have this huge lift that you see with the valuation. Now, we did this in Metalla because Metalla buys gold and silver royalties in the third-party market. People don't understand that, even though I told the whole secret in the book. And then we did this with Nova Royalty that does copper and nickel. And I think the billionaires see that this is a tremendous, gigantic problem. Financial Times has a great article over the weekend about Elon Musk has been securing nickel supply all over the world, frantically securing nickel supply. Why are they doing this? Because nickel is the key ingredient in batteries for EVs, and there's a lot of nickel in every EV, and the demand is literally, it's impossible to meet. And so you're also going to see regional demand become a big factor. Indonesia's the big producer right now. Russia's a big producer. This nickel is not going to hit North America in the way people think, because there's going to be ESG concerns. There's all different types of issues that people don't see coming. So Canadian, American, South American, Australian nickel projects are the ones to look at, and Nova has been an early mover. In fact, earlier than the names that you mentioned.
Okay, and so growth potential now, precious metals versus base metals. Where do you see the most growth potential?
Well, sadly, I think the base metals are a freer market because they're not as influenced by some of the macro things that influences gold. I mean, the gold price is heavily levered. It moves around in the futures market. You see it slam down $20 and then shoot back up. You can have futures contracts that offer you a heavy amount of leverage. Copper's not like that, and nickel is definitely not like that. I mean, you can barely even get a futures contract in nickel. We have an investor who's done that, but they had to create a product for him. It's something that wasn't even available. So the copper at $4.25, let's just call it a pound. If you take it to $5, $6 a pound, which is very reasonable, the price of those royalties, you're talking 40, 50 years of expected copper output goes crazy. And so I think that gold is obviously a big focus for me. It's a business that I love very much and I'm very excited about. But the copper and nickel market, I think, is more freely trading.
Interest rates, let's talk macro markets and interest rates now.
Yeah.
I find it interesting that I'm looking at the 10-year yield. It's been rising, but the 3-month LIBOR rate, the London Interbank offering rate, the rate at which banks lend to each other, that's been low. That hasn't tracked the 10-year at all. So the cost of financing, the cost of capital around the world is still at an all-time low. Do you see that changing anytime soon?
I mean, but not for everyone. I mean, obviously, if you try to borrow money for certain reasons, it's quite high. There's still situations where there's usury, in many of these markets. So it's only held low by the central banks. How long can they hold on to this? I mean, I think this is kind of a big picture thing, but I think we're transitioning into a new system. This is going to go on. It's kind of run the car as fast as you can until you run off a cliff and there's a fireball, and then you solve that panic. Because remember, you always have a panic, and then that gives people the courage to say, yes, we want you to fix the panic that you caused. You know how this goes? So you set my house on fire, and then you show up with the hose ready to help. So it's certainly ready to rebuild for a small fee. That's how you'll see this go. So they're going to keep this. This is not a real rate of return. I mean, everyone knows you work your whole life, you save up money, and then you loan it to someone for 1/4% or something.
Yeah.
This doesn't work. It's broken.
Well, that's what investors would like to know, EB, is that in a low real rate environment, where do you go to find yield? What investments do you go to? Bonds? No. Gold? Maybe. I mean,
so I'm in the royalty business. I think is for me has really been a huge creator of wealth. And what people need to understand is that, I mean, the stocks that you can buy in the market, everyone can buy in the market. This is not like some insider deal. What happens is every time gold moves just a little bit, the value of Metalla's over 70 royalties expands. And so what happens is you get credit for hundreds of thousands of ounces of gold in the ground that are going to come out in future years that are worth that much more. Yeah. So it's leverage in its truest form without borrowing.
How does that work? So Metalla goes to a producer or an explorer, and they ask them for a percentage of their sales.
That doesn't work out very well. So we don't do that.
You don't do that.
So
okay.
What we do is we buy royalties in the existing market. No one else does a good job of this. This is what we do. This is our secret sauce. So we go find royalties that have been around for 10, 15 years, projects nearing development, and we buy that royalty and bring it into Metalla as part of a diversified collection. Right. So that seller, that royalty, becomes a shareholder most of the time, not all the time, but most. We bought a royalty today on Equinox Gold. Yeah. It's a 5% royalty on an expansion portion of their Castle project. They would have never sold us that royalty, right? They don't need the money. They're well financed. You know, I was with Greg last night. It's a super company with extremely strong backers like Ross Beatty. They would never give someone a 5% royalty. But we found someone that had owned that royalty for ages, I mean, decades, and wanted to sell it and sold it to us. And so now we own that royalty on Equinox, which I think is going to turn out to be really a cornerstone acquisition. And I think people are slow to see that that's the 7th deal we've done this year. 7th deal this year. I mean,
what's in your portfolio in terms of metals? Is it mostly gold? Because I'm looking at
your
stock
silver.
price. It looks like it tracks the gold price.
Yeah, all gold, silver. That's it. Now, what we did is we created a separate company, Nova. Metalla's ticker symbol MTA on the U.S. trades in the NYSE. That's about 5 years ago. We started that company at 80 cents. It's about $7.50, close to $8 right now. Yeah. So, and it's down a lot. Right. So when people look, I mean, they say, well, I buy low, sell high, but it's not really true. Most people are panicking when it's $8. You know, it was 13 at the beginning of the year. But the gold market has been really tough. Yes. It's been really, really tough. All of the stocks in the royalty sector have been down this year. And Franco's the only exception, and that's barely flat.
Well, some investors might ask now that why would I be exposed to the miners in any form, whether directly through buying a stock of a miner,
I agree,
or through a royalty?
Because the chapter before the royalty chapter is all about how I can't stand mining stocks. No offense to all my friends.
Well, get this. I mean, the price of gold has stagnated, yet the raw input costs have gone up due to inflation, so their margins are getting squeezed now. And so,
typical. It's very typical.
As an investor, would you be invested in an industry where you can't really have control of the output price of your product?
I mean, the mining. As you know, ages ago, I ran an equity fund with Brett Heath, my partner, CEO of Metalla, where we bought gold mining stocks, and it was the hardest job I've ever had because they just can't ever kind of quite get altitude. And so that's why we fell in love with the royalty business, because you just said it yourself. The cost to bring the gold out of the ground, the labor costs, the oil costs, the equipment cost, all these miners are going to have electric dump trucks and all this. It's all coming. Yeah. Solar power, everything. So the cost that's going up. But for the royalty company, there's no more cost. Right. If we bought a royalty 5 years ago when gold was $1,200 and it's producing today, we have no other cost. I mean, we bought a royalty from Alamos that got news recently. It's a Yamana mine that's coming into production. We paid about negative $2 million for that after the buyback, and that'll produce for 10 years at $3 or $4 million a year. It's crazy. And we have, the oil price could go to 200 and we pay nothing. Yeah. So see, that's why I think people need to see the royalty business is very special. It's been something that's been my total focus. And I try to explain it to people, but I don't think they read it. I think they just look at the pictures and then.
Important chapter you have here is on MMT, modern monetary theory. it was a theory, maybe it's not so much
happening.
theoretical anymore,
Yeah.
but how does that affect your investment decisions? Why would I go into a risky sector when I can just buy the S&P 500 with free money being injected into the capital markets every month?
You can. I think the thing you got to realize about doing that, though, is that's a pretty old trade. I mean, that's been going on for like 10 or 11 years now. And so you really got to ask yourself, how much more meat's left on the bone there? I mean, can it double? Can it triple? I mean, you're talking about the world equity markets are maybe 115 trillion or something like that, and roughly the whole world. And then the gold market is 12 trillion, and the crypto market's 2 trillion. And so you kind of like look at these pieces, and you just say, like, can the overall equity market, the tech stocks, these tech stocks, remember, people are excited about user growth far into the future and willing to accept negative earnings today. Okay, so think about it. If interest rates do go up, like you were mentioning, hypothetically, which I don't think they will, but if they did, what does that do to these tech themes? I mean, it really kills the whole narrative that was driving that. So my point is that I don't see the royalty business as risky. When you have a company with 70 plus assets, 5 employees, with the highest costs they have are the exchange fees, and you say to yourself, you could just slow down the company and just sit for 30 years. What's the gold price going to be in 30 years? Probably not lower. I mean, I don't know. I mean, it doesn't need to go crazy. Sure. 2,000, 2,100, 2,200. I mean, this is big gains for 30 years of cash flow. Yeah. So you look out there 3 decades and you pull that value into today. That's coming. Right. People are going to, when they see that, these pension funds are fighting over pennies. And it's not going to last. Yeah. They're speculating. They're doing all kinds of crazy things with their assets. Yeah. Not going to last.
You mentioned Fedcoin in your book. Yeah. Now, you wrote this actually before the Federal Reserve actually made any official mention of Fedcoin. Right. Of course, they were talking about, other central banks were talking about it. What is that going to do to gold when it does come out eventually? What is that going to do with all your other investments?
Well, gold is a shunned asset, and most of the time it's because it's very difficult to track and it has all these features that governments don't like. Sure. That's not going to change. I think actually probably they'll ramp up. I talk about, maybe if they get really aggressive, what that would look like, an excise tax or something on gold. I don't think there's going to be a lot of enthusiasm from your elected leaders sure. about assets that give you personal freedom. And you got to realize the reason why governments love crypto is because it's infinitely trackable, traceable. Look at the hacks that happened this year. They miraculously found the crypto, pulled it back. See, they can do that with you too. Okay, so just be open-minded about this. Fedcoin is going to be how you pay for everything. You'll have a Fedcoin wallet. Maybe they'll call it something different, Liberty Coin or something. Who knows? Right. Whatever, they'll focus group test it. Whatever gets the best reaction. It doesn't seem totalitarian. Okay, but at the end of the day, every single transaction will be taxed.
I'm curious how that's going to change the money supply, because essentially they're creating a new currency.
Totally.
M2 is that going to be affected? I mean, we talk about the money supply increasing and how that has a positive effect on gold. So theoretically, shouldn't increasing the money supply through a new digital currency also have a positive effect on monetary metals like gold? What do you think?
Yeah, but think about like 12 trillion printed and thrown at this virus crisis, and the gold price is only
gold price went up
$200 or something like that.
Okay.
And so what you see is that the futures market is drives the price of gold. So the price that you see in the futures market, with Kitco, is different from the price you pay to get an actual coin.
Sure.
It's a different price. And so you're going to see that stay like it is. Now, when the supply gets tight, maybe you step the price up $100 and then you have a battle there again, right? Because a little more supply comes into the market. People recycle the coins and electronics, all this stuff. So there's enough supply to meet demand. But most of the turnover and most of the price you see is the futures market price. It's not the physical price. And that's just not the case with other things. I mean, I think they can keep that up for a while. So my point is they can create this new entity and the gold price can stay wherever you want it to stay.
So bottom line, if you're anticipating central bank digital currencies to come out around the world, even in the US, should I be selling my gold, hold it, or do you think I should?
What else are you going to do with the money? So if you sell the gold, what are you going to buy? People say, well, I'll buy property. Okay, well, that's got problems too. It's first of all, it's trading at sky high prices. Right. But you want to buy something that's out of favor and gives you the tools you're going to need in your toolkit to survive. The book is, again, the war against your wealth and how to win it. Not the war against 10 years ago and how to win it. Is the war against the future, is the war that's happening now. So when you look at your gold, you shouldn't have too much gold. Think about it. If you have 2-3% of gold in your portfolio, it's a lot. So some of that needs to be held physically and just hold it. That's all you do. I mean, you hope you don't need it. Like, because you think about it, if your S&P stocks double or triple, you just say, well, oh, well, the gold went up a little bit and I can always sell it later and I can give it to my kids or do something with it. It's not like you leveraged your house and bought coins. It's crazy. Like, who would do that? So it's not, they're missing the point. You know, they're caught up in like a speculative mentality. And that's okay, but it's way out of proportion to what's practical.
Okay, excellent thoughts. EB, thank you so much for coming today.
Thanks for having me.
And thank you for watching Kitco News. We'll have more for you at Denver Gold.
Kitco News special coverage of the Denver Gold Forum is brought to you by New Pacific Metals.